Hello, Oracles. Well, we've got Tesla consolidating ahead of earnings, despite the fact that we've been seeing a massive sell off in the mega caps in the stock market, moving into the small caps. We'll get into some of those numbers in a minute, see what's going on with Tesla, what the consolidation is looking like, and what we might end up seeing for a move if we continue consolidating going into earnings. Are we going to break out? Are we going to break down? We'll take a look at all that in just a minute. This is content that you guys like. Please hit that like button down below. All right, so taking a look at this stock here, again, we talked about it the other day. We looked like we were going to be consolidating going into earnings. Now, we didn't discuss it before, but the RSI, we came out here on the 2nd of July with the delivery numbers and we pushed up from there. We were already at the overbought range, which is typically over 70 on the RSI. From there, we pushed up to 80, all the way up to 86. And then from there, we ended up selling off. We've been consolidating ever since. So we're at 66 right now, which is below that 70. We'll probably hover somewhere around here until next week when we get to earnings. So the question is going to be, will we break out or break down? RSI isn't going to be indicating one way or the other, at least as of right now, which is going to happen. We do have the two gaps down below us, but we also have a gap above us up to 289. So the question is, which way do we move? Again, I don't know which way we're going to move, and the indicators that I see on the immediate charts right now don't tell us one way or the other. So when we look at this, though, Tesla on the day was up 0.3%. So you think, all right, that's not too much, basically flat on the day. But when you start looking at these other stocks that are out there, you look at Apple. Apple was down 2% on the day. Google was down 1.86%. Microsoft down 0.71%. Meta down 1.28%. You've got all of these mega caps selling off. All of the indices were in the red today. Even though we had been rotating from mega caps into the small cap stocks, the Russell was booming. Even the Russell sold off today. Everything sold off today. Tesla did not. So currently, right now, Tesla is kind of standing outside of the macro environment, awaiting earnings to see what is going to be going on. And so this is why it's going to be really hard, at least in the very, very near term, to determine which way Tesla is going to move. Again, long-term investors, this really isn't going to mean much for you unless you're looking for a potential buying opportunity to add more shares, looking for maybe a sell-off at earnings. Otherwise, if you're a swing trader or an options trader, this can be a very difficult one going forward. Again, we saw a nice pop when it came to the delivery numbers, but was that pop justified as much as it went up? Now we're consolidating around this $250 level. Are we going to push higher? Especially knowing full well that we have the election coming up. We've already seen a lot of drama going on with it. What other drama and turmoil do we have? We have President Biden coming out saying that, he's almost open to the idea of stepping down and let Kamala Harris step in and take over. Is this going to change and be the black swan event that causes the market to sell off? Are we going to get a situation where Tesla maybe has great earnings, pops up, and it does fill that gap at 289? Maybe it pushes up close to 300 and then just can't break that $300 level. Then we get into the election turmoil, and then the entire stock market sells off, including Tesla, and it comes down to fill those two gaps around that $230 level. Based upon what we have been seeing the last couple of years in the swings in the stock market, that could possibly happen. We have seen very wild stuff going on. I have no doubt it is a potential to go up and fill the upper gap at 289 and then come right back down and fill the other gaps. And I think it would go that way versus the other way and filling the gaps below and then going up, strictly because historically, going into a presidential election, we have a lot of volatility and a pretty big sell off between the September and October timeframes. So I think that's what we would end up seeing this time as well. But then also historically, after the election, you usually see the stock market run. The only difference this time around is going to be when the Fed is going to be cutting interest rates. Right now, the market is pricing in a 100% chance that they start cutting rates in September. I still think there's a potential that they cut them in July. The market doesn't think so, but I think it would have been smarter if the Fed wanted to avoid seeing any political type of skewing when it came to their rate cuts. If they cut in July, didn't do anything during the election season from September and October, and then did a cut again in November. To me, that would make the most sense based upon what the Fed was saying. I think it would make some effects go on. The only thing I think they might be afraid of if they start cutting rates is the market goes and runs, and then inflation comes and kicks back in. We've been seeing a very good trend when it comes to inflation, so chances are that wouldn't happen, but perhaps the Fed is just afraid that that might happen. Because everything is lagging so much when it comes to both their data and the effects on the interest rate cuts, plus a 25 basis point cut in interest rates really isn't going to affect the market all that much. But it could be the sentiment of that ends up causing something to happen. So, again, I don't know what's going to happen. That's just the way I think it should be done. But the market right now is pricing in a 100% chance when it comes to the market cuts in September. And so the way I'm playing it is exactly the same. I kind of call my ETF the lazy river of investing. I used to be a lot just basically into all Tesla, and now I've created a portfolio where I basically do nothing. My portfolio doesn't really move all that much on a daily basis. Today, it actually moved the most I've seen in a while because there was such a big sell off. But it really wasn't all that much. It's just such a minuscule percent because I have so many stocks that move in both directions. It's only when we see all of the indices sell off that my portfolio actually sells off. Otherwise, it's going to go up. And sometimes, it underperforms the market because it is just going to be a slow mover. But I have created it for cash flow generation. I'm at $460 a month when it comes to dividends and interest coming in. And because of the shift from mega caps into small caps, I did add a little bit to my SoFi position. So that brought me up to 50 shares here. And then I did add a little bit to Honest. And Honest is just like so minuscule percentage of my portfolio, but it's one of those little swing trades that I don't mind doing. I really don't do a lot of the swing trading anymore, but I'm taking a look if I can make a few dollars with this, maybe take my profits on it as we get into election season, see what goes on, and maybe then I'll buy a little bit more when everything dips at that point because that's what I think is going to happen. Stuff like this is what I'm going to end up buying in that, and then I'll take the profits that I make from it and I'll put it into my other plays, like my stable dividend stocks that are here as I'm building up and getting a significant amount of income coming in from them. And so, other than that, I don't really do a lot of movement when it comes to my stock portfolio. I used to do a lot of it in the past, but it's just too much for me. This is a much easier thing to track and follow. I really don't sell all that much. I really just add. I just keep on building up that cash position. When I see different opportunities to add some to it, I'm going to add to that. I take my high yield income that comes in, I do not drip that. Dripping is when you take the dividends that are paid and reinvest it back into that position. And I don't do that with the high yield ones. I take that money and then I'll put that money into cash and just wait for the opportunities to spend that cash. I've been building that up with the anticipation of what we have potentially coming up with the election cycle because historically we get that. So I just want to have that cash on hand so I can be ready to take advantage of those opportunities. I've been burned in the past with opportunities that have presented themselves and I had no cash. And I didn't have any positions to sell because typically when you have opportunities to buy a lot of stocks, everything is down. Opportunities to me are the stock price is down, I can buy more for less. And when that happens, typically all of my stocks are down. And I don't want to sell one of my stocks when it's down to free up cash for something else when it's down. So, because of that, I wanted to have that cash stockpile built up and have that cash flow coming in to take advantage of all of these opportunities. So, I don't know how much cash I'm going to distribute. As we get into it, I'll share all of my moves with you guys as we get into that cycle if we end up getting the sell off that I'm anticipating. But when we get there, I'll let you know. As of right now, I'm just holding steady, kind of adding a little bit. Once a week, I add a little bit to some stable positions just to kind of build up that income that's coming in. It's really it. It's all I'm doing right now. But if I have that income coming in and I see a nice buying opportunity in Tesla, say for instance, we do fill that 289 gap and then come down to fill that 230, you can rest assured I'm going to be adding some at that point. That's my investing strategy. You guys need to do your own due diligence and research and do what's best for you in your own portfolio, but that's what I'm doing for mine. So, all in all, it was very nice to see Tesla holding up despite the market selling off. Again, I think that's just because we're kind of sitting around that $250 level, consolidating, waiting for earnings that are going to be coming up next Tuesday after hours. So, earnings are going to be on the 23rd of July. And I won't be able to do a live stream for it just because of my job and things that are going on. But when I get home, if I can get home in time, I'll be able to jump on for the earnings call. If not, I'll just do a follow up and a wrap up afterwards to let you guys know what's going on. So, otherwise, thank you guys so much for watching. I appreciate all of your support. Have a great one.